Hey everyone, welcome back to another stream. Today is FOMC day. Now, I hope each and every one of you watched the update earlier on today. If you didn't, that is completely fine because I'm going to be talking through FOMC and everything else, everything that you need to know about the FOMC event will be in today's live stream, so do not worry whatsoever. If you do want to trade trade Bitcoin, then you can head over to Bitflex. You can check the top pinned comment in the live chat section if you do want to trade it. Personally, I'm staying away from Bitcoin today, tomorrow, because of the economic news event. I do not like to trade Bitcoin the day before, the day and the day after. Now, the reason for this is because Bitcoin is not a mature market enough, like traditional stocks or the S&P 500, for example, that it can be manipulated much more easily on by market makers, etc. So that is why I'm not trading. But if you do want to trade, then you can head over to Bitflex and let's jump into the chart because that's what everybody's wondering about. So let me just drink some water here, get fully prepared for the stream. I hope you guys do enjoy today's stream. It will be very, very important. So let me share this on Twitter as well. Let me know if everything is okay, if you can hear everything well. So let's get set if you guys are set. Okay, so you want it to be a little bit more louder. Okay, voice is a bit low. Let's increase the volume. So what we want to do is, we want to go to Bitcoin. So Bitcoin is still in this ascending triangle. If you watched the yesterday stream, the CPI stream, it was a bit different to this, I adjusted it a little bit. We saw a wick towards the upside. So we saw a small break towards the upside. However, what then happened was, we came back crashing in towards this pattern. Now, this is not nice. And I'll tell you why this is not nice. And this supports my argument for the S&P 500 and for traditional stocks. We saw the S&P rally right after the CPI news came out. We came at 4% inflation for the CPI. And of course, this was super bullish news for the CPI. The FOMC will start in 12 minutes and I will be sharing the data with you guys live and the press conference live too, because that is when the most volatility happens for Bitcoin, So I'm gonna be sharing that with you guys live today as well. So stick around and make sure to smash up that like button. That would be much appreciated. So after we came to 4% inflation rate on the CPI, we saw the S&P 500 rally towards the upside. Now, if you watched the earlier video, I said that I think, the S&P 500 could see a small correction, a reversal towards the downside after this Fed interest rate. And that is exactly what is happening. If I jump to the 1 hourly time frame for the S&P is actually seeing a little bit of a reversal towards the downside from this 439 level. Now, this doesn't really matter too much to Bitcoin because, as you guys know, Bitcoin has not been in this direct correlation with the stock markets like it has been in its previous history. So that is the only problem. Now, guys, let me know if the volume is good, the video is good, and I will check and sort out everything if it's not good enough. So what I'm talking about right now is, perfect, thank you. The charts, it's not working for some reason. Let's switch to Telegram, and then I'm going to switch it back to the charts so the thing will come back, So this is a technical problem. Let's fix it. So if we jump to Telegram, then we jump back to the Brave browser. Perfect. Now it should be sharing again. So we're still in this ascending triangle, Now Bitcoin is not as correlated as it used to be as the stock market. What could happen on the stock market is that we could form a potential head and shoulders pattern. It will all depend on today's data. Now, my personal prediction for today's data is that the Fed may surprise us, Everybody's saying that the interest rate will be the same. Now, if we look at the trading economics forecast, it is forecasted to be at 5.25%, which is the same as the previous inflation rate that we saw in the previous FOMC conference and the FOMC data release. Now, personally, I think that the FOMC the Federal Reserve can increase the interest rates this time round and surprise everybody. I'm going to get into the reason for that after I drink a sip of water. So there we go. Nice. Now I'll tell you the reason. The reason is Because the BlackRock CEO, right, I've mentioned this in the previous videos as well. The BlackRock CEO said that the Fed will increase the interest rates most likely 2 to 4 more times before we reach the CPI goal, the inflation goal of 2%, which we're still double at. So we're still at 4%, we're still far away from that. So I think the Fed may surprise us, but don't quote me on that, right? It's most likely going to be the same because all the indicators are showing that it's going to be the same. But I just think, right, they may surprise us. So be careful of that. Now, a couple of interesting things that I want to show you guys. Now, we've seen the S&P 500 rallying, right? We've seen the S&P 500 rallying, although the reason for this is because of just a couple of stocks. So 7 stocks in the S&P 500 are responsible for 93% of the S&P 500 pump. We can see Apple has increased by 2.4%. We see Microsoft 1.9%. Then we see Nvidia 1.8%, Alphabet Inc., Google 1.3%. So all of these major companies account to 93% of this S&P 13% year-to-date increase. Now, this is very important, right? This is actually pretty important, and I'm going to tell you why, right? We're seeing the S&P 500 cup, and if you guys realized, most of these companies, well, basically all of them are tech companies. So these are all tech companies that are resulting for the S&P 500 to pump. So it's not really because of the current economic situation. However, it's more so that AI, we saw the VR glasses from Apple. These things are what is pumping the markets really. Nvidia is increasing because of AI demand, right? We see Apple increasing from Apple Vision Pro, and they're a pretty cool lineup. So this is why the S&P 500 is pumping rather than the bullish. Well, we're not in a bullish economic scenario yet. Today's FOMC data will determine that, but that is what is very interesting. That is the first thing that I wanted to share with you guys. Now, the second thing is, right, if the Fed increases their rates today, unrealized losses on bank balance sheets will get bigger. They are 6 times what they were in 2008. This is incredibly concerning, right? This is incredibly concerning, and Elon Musk has agreed with this, right? He's put an exclamation mark over there, but that is incredibly concerning. If we see another Fed interest rate increase, what will happen is a lot of more banks will go into losses that could cause more banks to default, right? So if my theory is right, and the Fed does increase interest rates today, what could happen is Bitcoin could see a major rally, defying the S&P 500 that could dump further towards the downside. Because of course, if banks default, then Bitcoin tends to increase. So this is the very important thing that I will look out for. And technically, we should be rooting for a Fed interest rate increase rather than a decrease. So that is my personal perception on the entire situation. And guys, as I said, I'm not going to be trading this, but if you do want to, you can head over to the chat replay, well, to the live chat, and you can trade Bitcoin before the FOMC starts using Bitflex. That is where I am trading at right now. And you can trade Bitcoin over here. We're doing the $1,000 trading challenge right now on Bitflex, and I've done it for my personal trading as well. It is a pretty solid exchange. So let's jump back into Bitcoin. While we're trading, we're hovering around $26,000, and the FOMC is in about 6 minutes time. So we still have a little bit more time. I want to check the funding rates, and I want to look through a couple of other stuff. The funding rates are mostly negative, which is positive. That means long positions are most likely to occur more compared to short positions. So that is a good sign. That means that's one good sign. But of course, never just rely on funding rates, right? Never just rely on one indicator, one thing. Always use a consensus of different indicators, different data to evaluate and come to a conclusion on a trade. So what did we have, right? Earlier today we had PPI. It's not that crazy of something that it impacts prices of Bitcoin or anything. It's not that significant. We had PPI, but the most important thing is going to be of course the FOMC statement and then the FOMC press conference in about 35 minutes from now, because after we receive the data, right, the press conference is actually causes usually more volatility for Bitcoin. So do stick around until the end of the stream, because that is when we're going to get to the FOMC press conference, and that is when the real volatility will come around for Bitcoin. Now, let's see. Let's see what you guys are saying. The sound quality is low. I'm trying my best to speak loud here. Maybe, I'm not sure. Please try and increase the volume on your device. I know the sound may be a little low. I'm not in my studio right now, so that's why the sound may be a little low. So I do apologize for that indeed. But let's jump back into Bitcoin. Right now, we're not doing anything. The FOMC statement will come in 5 minutes. And that is what we are super excited for. Now I want to look at the DXY, right? Because DXY is what, you know, the DXY is the value of the dollar, and the value of the dollar has been decreasing significantly. We've come to the resistance of this falling wedge, and now we're seeing a drop towards the downside. Now, if you guys remember, Bitcoin and the DXY used to be inversely correlated, right? Bitcoin and the DXY used to be inversely correlated. Whenever the DXY dumped towards the downside, Bitcoin would usually increase. Well, we're not seeing that correlation anymore, unfortunately, which is very, very annoying, right? That is very annoying. So Bitcoin is kind of doing its own thing here. What happened was, after the FTX situation, right? After FTX and the now current crackdown on crypto by the US, a lot of market makers pulled out from crypto. So when market makers pull out from crypto, right, usually there is much less liquidity, therefore more volatility should happen. However, on top of this, the retail interest in crypto has also dropped. Therefore, we're not seeing anything crazy in the crypto markets. And my prediction for a next bull run where things are going to get crazier is going to be 2024. There is less than a year left for the Bitcoin halving, and coming towards that, I think Bitcoin can see a rally towards the upside. So let's jump back into the chart, right? I want to show you guys this chart over here. So this is an incredibly important chart for Bitcoin that we must look out for, right? This is incredibly crucial, and it will determine Bitcoin's future. Now, there is a couple of scenarios on what could happen, and I am prepared for both scenarios. There is a bullish and a bearish scenario, of course, and I will tell you that right now because we still have 3 more minutes for the FOMC statement to be announced. And sip of water. There we go. Okay, there we go. Perfect. So now we can look into the scenarios. The first scenario is a potential head and shoulders pattern, right? We can see this major head and shoulders potential pattern forming on the weekly chart for Bitcoin. That would be a catastrophic scenario, and that could bring Bitcoin all the way down to the $21,400 level, which is something we do not want whatsoever, right? That is a scenario. The second scenario is that we find support at these EMA ribbons. We're still under this 200 period moving average, which is incredibly concerning. We have to make it above here, the 26.4K level. We must get above. And if we do get above this 26.4K level and we find a reversal at this level, then we could form a potential double top, or at least, right, at least we will continue this uptrend. Because if I show you this, right, we're still in an uptrend for Bitcoin on the weekly time frame. Now, it's going to require some adjustment on this trend line. So if we adjust this trend line a little bit, make sure we get that huge wick, right, accounted for, and let's adjust this a little bit more. Perfect. So this is a very nice trend line that Bitcoin is holding on the weekly time frame. And what is very crucial is that this level, the 24.2K, 24.3K level, is also incredible support on these previous wicks as well. And the FOMC will come out in just under 1 minute. So I'm going to get into that as well. So I'm going to continue discussing this after. So let's zoom into Bitcoin a bit more. The volatility is kicking up, and let's check if the CPI data is released. No, not yet. We have not released the CPI data yet. So let's have a look at the interest rate, and we're going to refresh it in like 30 seconds. So let's wait for this. Hopefully, right? Hopefully we're aiming for, you know what? I don't know what to aim for, honestly. I'm personally not sure what to aim on at this point. If it's the same, we don't know what's going to happen. If it increases, then technically markets should dump. But Bitcoin is, of course, it's better for Bitcoin if banks default. So a decrease would also be good for, an increase would be good for Bitcoin. So it's just going to be very interesting to see. This is probably one of the most important FOMC events of Bitcoin's history. So this one is one to definitely look out for. And it is 10 p.m., ladies and gentlemen, and the rate should come out right now. Let's have a look. I feel like I'm in a sneakers game. You know those when sneakers drop and you keep on refreshing the page to get your sneakers from the sneakers app? This is exactly what it feels like at the moment. So why is it not updating? Let's see. Markets are not, well, Bitcoin is seeing a little bit of a pump, but I can't seem to see the new interest rate. So come on, let's, this is strange. We're not seeing the new interest rates on trading economics. So what I'm going to do is I'm going to check investing.com. There we go. They've paused it. Okay, it remains paused. So the interest rate has paused. It remains at 5.25%. Okay, it's remained at 5.25%. So this data over here was accurate. And my personal prediction did not come true. And honestly, I'm thankful for that, because if it did come true, then we would see insane price volatility on Bitcoin. There we go. This 1 hourly candle is a bit crazy. It's not too crazy, right? We're seeing, I would personally not trade this. It's just a bit of a liquidity grab in my opinion. But the Fed interest rate is staying the same at 5.25%. However, it's not over. It is not over, because what is even more important is now in half an hour, we're going to have the press conference. Let's do a sip of water very quick. So in half an hour, right, when we see the press conference, that is what's going to be super important for Bitcoin. Because during the press conference, we usually see more volatility compared to the actual data release. So this is when the Fed chair, right, he says some stuff about inflation, and if the US is in a positive or negative, whatever, it's usually not truthful, but it does impact Bitcoin's price. So let's see, this candle is a little volatile, but nothing too crazy. But guys, let's smash up that like button for the stream. That would be absolutely incredible. It's all I ask in exchange for this content. So if you can smash up that like button, that would be absolutely perfect. Now, a very important level for Bitcoin to hold would be this bottom trend line. So this support line of this, if you want to call it, it could be symmetrical. I mean, it's just, you can change it to be different stuff, right? It's a bit more open to perception. You can call it an ascending wedge. It's really much more open to perception. So this is what we're seeing right now. It can even be a symmetrical triangle if I push it a bit more, but it looks more like an ascending wedge. So the very key level for Bitcoin to hold is the 25.8 for this support. Oh, Carl's in the chat. What's up, Carl? Nice to see you. Nice to see you. We have a very cool legend in the chat. Now, if we zoom in, right, we zoom in a little bit more on the 1 hourly time frame, what we can also see is a bearish continuation. And guys, for the people just joining right now, the Fed decided to keep the interest rate at 5.25%. It came as expected, so we're not seeing major volatility on Bitcoin's price. But if I zoom in a little bit more, we can see that there's another smaller ascending wedge forming on Bitcoin. And this, guys, this could be a little bit of a tradable one. So you could trade this ascending wedge. Again, if you want, Bitflex is my desired exchange, and you can sign up to that on the pinned comment in the live chat. Now, this is a potential tradable pattern here, but as I said, I do not like to trade the day before, the day, and the day after an economic event, and I will not be personally trading this. Now we're seeing a little bit of a bigger dump right now. Bitcoin's trading at 25.9K, and we are breaking down from the support of this. Of course, this pattern is usually bearish, and it is coming from bearish price. So yeah, we are breaking down from the support here. I'm not trading this because it's just, I don't like to trade number one, 1 hourly time frames, and number two, it is an economic event. So if we do manage to end up breaking from this larger support level at the 25.8, I'm going to now share you my bigger targets, right? My bigger support levels. So let's have a look. Let's jump into the daily chart for Bitcoin. Let's zoom out a bit. We still have 25 more minutes for the press conference. Do stick around because, as I said, the press conference is when things really get interesting for Bitcoin. That's when you want to really watch out what happens for Bitcoin's price. So let's do a quick water sip. It's crazy. I feel like, oh, mouse is not moving. Thank you, thank you, thank you. This happens, guys. I use OBS, and sometimes OBS just glitches. So let's fix that very quick. Okay, now it's fixed. Perfect. There we go. The thing is, right, OBS glitches sometimes. It's annoying, but that's fine. I'm going to really switch to a more professional tool for streaming, and that you will really love for sure. So if we look at the support and resistance levels, right, these are the very key levels of support and resistance. The major one towards the upside is the 26.6K. This is the level that we must break above for a bullish continuation towards the upside. Bitcoin is kind of doing its little thing over here. It's not really looking incredible. In fact, what I want to do is I want to look fresh. Let's have a fresh look at the chart because I haven't done that in a while. And what really helps is that you just clear everything from your chart and you get a brand new fresh outlook. Right? I've already shown you this chart, and this level, this line over here is incredibly important. And this level, this line here coincides with the 24 24.2K level of support, which is incredibly important. And we have multiple tests to this line on Bitcoin's history. So if we do break down from this 25.2, I have a short position towards the downside, because that would mean we're breaking down from the EMA ribbons too. My first take profit will be at the 24.2, then the 21.4. So this 25.2 is an incredibly important level, but once we look towards the upside, then the 26.6 is incredibly crucial. So if you guys are just joining again, the Fed decided to pause the interest rates. We've not seen major volatility. In fact, let's have a look at the S&P 500. The S&P is dumping like predicted. If you watched the video earlier on, I mentioned that after today's results, we're most likely going to see a dump after a massive increase on the S&P 500. This dump is also followed by a beautiful shooting star candle on the 4-hourly time frame for S&P, which of course signifies an exhaustion in buyers, and now we're seeing a dump towards the downside. We're coming to the parabolic SAR support at the S&P 500 on the 4-hourly time frame. So let's see if we can hold that. That will be very, very important. Guys, I feel like I'm talking at a million miles an hour. It's pretty crazy, and my mouth is becoming dry like instantly. So again, I have to take another water break. I feel like a Bugatti, right? A Bugatti just sucks up the petrol in like 2 seconds. So I need to drink some water, guys. There we go. Okay, now I can talk really fast again, but I'm not going to do that because it's hard for people to understand anyways. So now I want to look at, freshly at the Bitcoin chart, right? This is the daily time frame for Bitcoin. We have this very clear downwards trend line forming for Bitcoin. So this is the very important trend line, right? So this trend line will decide if Bitcoin reverses into a bullish momentum, right? This is a downward trend line. We're in a bearish pattern right now. We're in a bearish trend, sorry, not bearish pattern, bearish trend. And until we break above this 27.2K level, which is also a very important level of resistance now, if we break above that, then I'll be flipping bullish into Bitcoin, and that is when I'll be starting to activate some long positions. But currently, I'm in a no trade zone and currently not opening any trades. Now, if we draw the bottom resistance line, right, we can take it from this wick over here, and we could do it so it's like this. So we have this massive falling wedge. We had a falling wedge before. We traded that very nicely, and we took profit on that a couple of days back, last week I believe that was. But now we have an even larger falling wedge forming. Now, of course, this pattern is usually bullish. So if we do end up finding support at this support level, right, then we bounce to the 26.9. This will be incredibly good for Bitcoin, right? So this is the bullish scenario that we must look out for. And if we do end up breaking towards the upside from this pattern, then it will be incredibly bullish for Bitcoin. But until then, my bearish scenario is still in play, and this is what we really need to watch out for. Another water break. But if you guys want me to look at a altcoin, do let me know in the chat section. I will look at an altcoin. Actually, XRP was one that was super requested. So I'm going to have a look at XRP very quickly. So let's have a look at XRP USDT. XRP, wow. XRP is having a major dump towards the, well, of course, it's dumping towards the downside, right? That's not a surprise. But if I have a look at the weekly chart, because I have a feeling that the weekly chart is going to look more interesting. And we can see that a double top is forming for XRP on the weekly chart, and a place to short, in my opinion, will be at 42 cents for XRP. Wow, we have a bunch of comments flowing in. So let's have a look at, yeah, I know, my mouth is getting dry so fast from speaking. Usually when I upload a video, I can put cuts and stuff, but of course in a live stream, it's harder, so I need to keep on going. Let's have a look. So let's have a look at the chat. Yeah, that's true. My Head and Shoulders, right? There is like, it's the Head and Shoulders. It's still not a confirmed situation. We must break below 25.2K to see more of a confirmation on this pattern. However, it's still not coming to validity yet. That's why my trade isn't open. It will only execute once we fall a little bit below the 25.2K, of course, with a tight stop loss. So I'll have a look at Solana, right? So I'll actually show you this list here. This list is pretty important, and I will leave a link of this in the chat right now. So go have a look at this list. It's super interesting. I shared it on my video, I think 2 days ago, or was that the live stream? I'm not sure. I'm gonna drink some more water. Guys, I really apologize. I don't know what's happening with me today. It's a bit late at night also. I haven't eaten anything. I don't know if it has anything to do with it, but this list is super important, right? This list has all the tokens that the SEC deemed as securities, right? The SEC deemed all of these as securities, and a lot of them saw a major dump towards the downside. If we look through this list, BNB fell by 21% in the previous 30 days. XRP went up 18% because, of course, this is majorly due to their case, their lawsuit. The lawsuit is super important, not just for XRP, but for the entire crypto industry. Because the XRP, right? Let me switch to the direct facing camera because this is a very important topic. XRP, if they win the case, then that will show to the crypto world that most of these tokens that I showed you on this list, they are not securities. Because for something to be classified as a security, they need to go through a proper judicial process. They need to go to court, and then at court, the judge has to say that, okay, look, this is a security. Now, the SEC saying that these are securities is not enough, right? However, a lot of exchanges in the United States, including Robinhood, got scared of this and decided to delist some of these trading pairs, and will have a forced sell event on the 27th of June, which can further hurt a lot of these altcoins. So this list, I'm actually looking to DCA into a majority of these projects. For example, Matic, beautiful project to DCA into. If we have a look at the all-time data, right? Let's go into the monthly data for Matic. We are at incredible lows, right? We're approaching lows from literally like back in 1st of June of 2022. I believe it's an incredible opportunity to personally DCA into Matic right now, because this is a price where you're not going to find it. It's incredible to DCA in my opinion. Of course, nothing in this video is financial advice, but I personally went and bought some Matic in the past couple of days because it's just super, super cheap. It's an incredible project, and I bought some of Matic. It's just incredibly cheap in my opinion. So there is a bunch of projects where you can go and have a look at, right? Algorand, another beautiful one to look at. Algorand, perfect project, and I'm DCing into it personally. Sandbox, Decentraland, these are all I'm personally DCing into. But do have a look into each and every one of them. Go ahead, read their white papers, understand what they're about. Do they have a profitable business model? If they do, then you can do your own research, come to your own conclusion. Don't listen to others. Always do your own research first, right? Take ideas from other people, but do your own research, then come to your own conclusion. That is what is important. So do that. And then if you like any of these, then you can, of course, go ahead and buy it at your own risk. Now, I want to look at XRP again. XRP still forming the same thing, but Bitcoin, the chat is saying we're dumping. I'm not sure if that is the situation, but let's have a look. BTC USDT, OKX. Let's have a look. No, we're not seeing a major dump towards the downside. Guys, remember, in like 15 minutes, we're going to see the FOMC have the press conference. That is when the real volatility will kick in for Bitcoin. So don't leave, stay until like another 15 minutes. And that is when we're going to see major price action on Bitcoin. So stay until that. But guys, thank you so much. Please do smash up that like button. That would be absolutely amazing. Let's get this stream to 200 likes if possible in the next couple of minutes. That would be absolutely appreciated. And guys, don't forget, if you want to trade any of these cryptos, you can go and head over to Bitflex. You can use the link in the description below, right? And it's the top pinned link in the on the live chat. So you can go there, sign up. Currently requires no KYC. So that would be absolutely amazing. So if we have a look at the CoinGlass funding rate section again, the funding rates are mostly negative, saying that, technically there should be more short positions in the market. But again, because it's a news event, there is a lot of volatility. So not relying solely on that indicator whatsoever at the moment. So what we have, let's have a look at I'm going to have a look at the chat, right? Show me some of your altcoins that you want me to look at, and I will do some technical analysis on them in the next 5 minutes. But the only condition is that we hit 215 likes. That is the only condition. So while you guys smash up your like button and also leave me some of the altcoins that you want me to look at, then I will also drink some water and have a look at it in hopefully just a second. So let's get the stream to 215 likes. That is what I'm looking for at the moment. Okay, Pepe. Pepe is a very much requested one. And we did hit 215 likes. You guys are absolutely fantastic. Wow, we're smashing it. Let's continue smashing up that like button. That's beautiful. That's what we like to see, guys. Thank you so much for that. Let's have a look at Pepe. Because Pepe, right? What the hell did Pepe do? I mean, I've been talking about this. I've said that the craze is going to be over. And, you know, just don't get emotionally attached to your investments, because a lot of people get emotionally attached to a bunch of their crypto investments. And because they do get emotionally attached, they fail to take profit. They fail to sell when they need to, right? So, wow, the moon smashed the like button. Thank you so much, Carl. Thank you, guys. Thank you so much for smashing up that like button. But it's looking pretty bad for Pepe. We've seen this major pump, of course, and this mega dump towards the downside. It was just a one-time thing, guys. It was really like the mentality behind Pepe is the same as the general mentality in crypto. The mentality is 95% get into crypto to make money, right? And this thing just came out. It was an opportunity for people to make money. And now we're seeing a slow descent towards the downside, because of course, it's not a hot topic anymore. That's just what's going on. Okay, Carl requested TA on Matic. So let's have a look on Matic, because Matic is a project that I really like. And I really want to make two dedicated videos, one on Matic and the other one on XRP, because I think these two projects are massively undervalued, right? So we saw this major dump towards the downside. If I zoom out to the weekly time frame, we saw Matic really have a very negative dump. So in fact, this dump started from about here at 94 cents, and we dumped around 45%, guys, 45%. It is not a joke. 45% is really not a joke, and we dumped all the way down to 50 cents, and now we're trading at around 64.9 cents. Well, 64.9 cents. So it was a very big dump towards the downside, and it's very hurtful to see altcoins getting butchered like this. Hopefully we'll recover. If you haven't bought up some of these altcoins, it is a very good time to be buying into these altcoins, in my opinion. And if you hold them already, then of course continue to hodl. That's what I would say from personal experience. Again, not financial advice, but if you do hold these altcoins, then really the smartest, most logical thing to do, in my opinion, would be to continue hodling and just DCA buying with money that you're not afraid to lose. So that is it for Matic, guys. You know, it's just, I'm not going to give you a very big prediction or anything. In fact, on the weekly time frame, we're still looking bullish. I mean, we're still looking pretty bullish for Matic. If you want to call it, we're still in this big bull flag type of thing situation over here. In fact, you can call it a more of a bullish pennant if you want to. But it's just, Matic's looking okay. We touched this support very nicely. So let's see what happens in the next bull market. I think the next bull market is going to be very important for Matic. So let's jump back into Bitcoin very briefly. There's still 12 minutes until the meeting, the press conference happens. So let's have a look at what Bitcoin is doing. Wow. Okay, when we zoom out of Bitcoin, doesn't it look beautiful, guys? We're still in this massive uptrend for Bitcoin on the, on the very macro at least, right? We're still on the big uptrend. We can see this very clear trend line on the weekly time frame that we must hold, right? We must now hold this 21.4K level. And if I show you this chart over here, right, this 21.4K also pops up over here as a very important level of support. So this 21.4 generally is a very important number for Bitcoin to hold if we ever decide to break towards the downside. So this is what we're looking at on the macro scale for Bitcoin. Okay, so let's have a look at ADA, because ADA is something that is requested, but I will look at ADA only if we get to 300 likes in the next 2-3 minutes. So I'm giving you guys the opportunity to smash up that like button for me to look at the ADA price chart. And if you God, water break. You know what that calls for? Water break. Whenever I mess up lines, I need to drink some water. Let's do a shout out for the vlog. I was going to do the shout out. Let's do it now. The vlog, right? Carl posted this incredible vlog. It was supercar shopping. It's incredible. I posted it on my community post section. So if you head over to my channel, press community post, then you can go and check out Carl's vlog. I got featured here. It was beautiful. So thank you, Carl, so much for having me on in this vlog right there. Comment down below on the bottom of the vlog, shouting Crypto Kid Gang. That would be absolutely amazing. And maybe Carl can feature me in future vlogs as well. But on this channel here, we're going to be having some pretty cool content. So do smash up that notification bell too if you're watching right now. Wow, okay, so we reached 277 likes. I will have a look at ADA and other altcoins too, including BNB and some of the stuff that you guys are mentioning, Arbitrum. But we need to get to 300 likes. That is my only condition. And we have 10 more minutes until the press conference. So do smash up that like button so we can have a look at some more altcoins. And then we will have a look at the press conference live. So guys, let's get it up. And if you are having trouble with the audio, please do turn up your device volume. It's just I'm not in the studio. I don't have my mic right now. And this is the max volume that I can get from my MacBook. So please do increase the volume. That will be much appreciated. Now, Bitcoin 25.8, we're still at 288 likes, so I'm not actually gonna have a look at the altcoins until we hit 300. There we go, 292 likes. We can get there, just 8 more likes, guys. Smash it up, smash it up. Come on, let's get this, guys. Let's go, let's go, let's go. Okay, in the meantime, what I'm gonna do is, we can have a look at the DXY and the S&P 500. Well, the S&P 500 just fired a sell parabolic SAR on the 4-hourly time frame, and this could indicate a more major dump towards the downside. Okay, 300 likes, congratulations. I mean, you guys are awesome. 300 likes, perfect. Now we can hit ADA. Forget about S&P 500, no one cares about that anyways. But now we can look at ADA. That is what everybody cares about. And then what we're gonna do is we're gonna look at BNB and Arbitrum. Thank you guys so much. You guys are all awesome. You smashed up that like button. That's really incredible from you guys. So thank you so much for that. Now, BNB and ADA, well, ADA is seeing a very similar thing, right? We saw a major dump on ADA. We saw a dump towards the 22 cents level, and now we're trading at 27 cents. It's pretty incredible. Again, it's one of these altcoins that got smashed in the SEC situation. It's one of those SEC tokens that the SEC said is a security. Well, it's technically not until the judge determines it is a security, but unfortunately, it did see a major dump towards the downside to the 22 cent level. Now, that drop, is it as significant as the one we saw in Matic? I'm not sure. Yeah, well, it is. It's basically it's the same. We saw a 41% drop, and that is another incredible number. And I'm sure this was lost in like just over like 2-3 days. Yeah, we saw the drop from the 5th of June until the 10th of June, 5-day period where we saw this mega drop towards the downside. So it's really painful because ADA is a beautiful project, and it's just unfair that these projects got hit very badly. And it just feels like a bunch of market manipulation. We see all of these projects, and I did share this list. I'll share it again so you can have a look at it. And I think these projects could be nice to DCA into. So I'm going to share it again in the chat, and there you go. You can have a look at that as well. And there's another page. So some of these projects, of course, not all of them, like for example, FTT, for sure, it's a security in my opinion, but some projects over here, I think, could get away with it. So do check out these projects and do your own research into them. That is what is super important. Now, Matic is one of these projects. ADA is one of these projects. It got very hurt, incredibly bad. And if we jump into ADA, right, I'm just going to say it's a good time to be buying, in my opinion. I'm not going to give my personal price target for ADA. I just think it's a very low price, and I think it's a time to be DCAing. So I'm not going to give you a specific price target, of course, especially after a massive dump like this. But all I'm going to say is I'm going to be buying ADA at this price because it is a dirt cheap price to get in for ADA, especially looking at the next bull market, right? So not financial advice, but I'm personally going to be buying into ADA because it's just so dirt cheap. It's a beautiful project, and it deserves to reach much higher numbers coming to in the next bull market. Now there's 6 more minutes left until the press conference, so we're just going to be waiting out for that at the moment. Do drop your other altcoins for me to have a look into. So Arbitrum, we're going to have a look at Arbitrum. Let's have a look at Bitcoin very quick. Bitcoin is not doing anything at the moment, but if we have a look at ARB-USDT, so let's have a look at Binance Arbitrum. Wow, Arbitrum saw this dump too. Man, what is happening with these altcoins? It's just incredible. I'm going to have a look at the Bitcoin dominance in just a second because Da Vinci was talking about this, and it's really crazy that all these altcoins are getting incredibly butchered, and some of these are just easy 20x. Like, it's just easy 20x's. right? It's just easy 20x's in my opinion for the next bull market. So I'm going to be buying a bunch of these altcoins, and leave it in the comment section below. Do you think I should make a altcoin bundle video where I just show you which altcoins I'm going to buy and just 10x, 20x, 100x that portfolio? So do let me know in the comment section below, should I do it? Should I make a video like that? But if we look at Arbitrum, right, it's at a very crucial low. This was, of course, when it ICO'd, when it first launched. And now we've made new lows for Arbitrum at 93 cents. I think it is a beautiful project as well. It's another Ethereum killer in my opinion. So, you know, Arbitrum is another good project in the long term to be DCing into, in my opinion. So this project definitely, I think I should include in my portfolio of altcoins to buy during this mega altcoin smash. Now, Bitcoin is doing the same old, still at $25,800. So we still have 4 more minutes to go, ladies and gentlemen, and we are going to have a look at the Fed FOMC meeting. I just need to find, where did I put it? I think I got rid of that tab. So let me open that right now. And in the meantime, guys, if you're not using a crypto exchange already, you can sign up to Bitflex over here. Join my free Telegram channel. That is where I do all my updates, which are not on video. So do join that. It's a very incredible alpha channel. And of course, it's going to be even more alpha, right? There's going to be more alpha coming towards the bull market. So do sign up. It's for free, and I just share all my stuff for free over there. And the final thing you can do is, in the meantime, sign up to TradingView, guys. You can get up to $30 put towards your new plan if you sign up to TradingView. Of course, $30 is a lot for some people, right? So, and TradingView is expensive. So if you do use this link here, you can get a nice discount on TradingView. So let me find the Federal Reserve tab, and then I will get back onto YouTube because there's like 3 minutes left. I think, yeah, 3 minutes left until we see the FOMC press conference. So let's have a look, Federal Reserve, and then I'm going to jump into their live stream. Okay, so the press conference is about to start. In fact, their live stream on YouTube has started already. So let me just draw this tab over here because we want to, whoa, what just happened there? Let me draw it there. We will have a look at this. Okay, perfect. There we go. Now it's there. Sorry for that. Now let's have a look into Bitcoin again. Let's jump into Bitcoin because there's only 3 minutes left, less than 3 minutes. This is not the chart we want. We want the OKX chart. So there we go. We're still at 25.8. We're still in this pattern. If I have a look at the 4 hourly, we're still, you know, just having this consolidation, parallel consolidation towards the upside. And we're still yet to break from this. And I think we will see the break during the press conference. That's what usually Bitcoin does. So that will be very interesting to see, right? But I'm going to check the chat. Is there anything you guys want me to have a look at? Wow. There are a bunch of stuff you guys want me to look at. Federal Reserve. There we go. Okay, let's have a look at Doge. Let's have a look at Doge. Doge is something that you guys want me to look at. There's still 2 more minutes. So I'm going to spend these 2 minutes to have a look at Doge. Now, personally, in my opinion, Doge is a beautiful project that I buy, right? I buy Doge every single time when we see it drop towards the downside because I know Elon is bullish in the macro for Doge, and I believe that he will, you know, really integrate Doge into his operations with Twitter, making the X app, right? He wants to create the X app, the everything app that has a payment solution. It has a bunch of things in just one single app. So I think, you know, he will really do something cool with Dogecoin. So that is why I want to, I always really end up buying Dogecoin at highs. And guys, Dogecoin is another one that dropped massively. I can't believe this. I really can't believe we saw a mega dump like this on the markets. It's just super unfortunate. So Dogecoin is unfortunately forming like a bearish continuation pattern over here. But honestly, I'm just buying more. No matter what pattern we're forming, I'm just keep on buying these altcoins. That's for sure, because it's just incredible. We're seeing this dump. It's huge. It's huge. I didn't really think it was that huge before. Now the press conference is starting in like a couple of seconds. So I'm going to switch this chart back to Bitcoin. And what I'm also going to do is I'm going to set the Federal Reserve meeting ready. It's not open yet. We still have like 20 more seconds to go. So let's set this to the latest, and boom, we're all set for the press conference. And then I can kick back and relax, and then we can enjoy the press conference together. What is MTL? I'm not sure what MTL is actually. That's why I didn't look into it. Does Dogecoin have a good development team? Guys, I'm not sure. I'm really not sure about that. I mean, I'm just hoping that Elon is going to do something with it. Okay, it's starting. So what I'm going to do is I'm going to mute myself and I'm going to open the press conference, and then we can watch this together. And if anything crucial happens, right, I will update you guys live. I'll stop, I'll pause the video, then I will update you personally when something interesting is happening. So let me mute myself over here and let's have a look at the press conference. Well, he still hasn't come on, so we'll wait for him to come on. But guys, this is going to be one of the most important events for Bitcoin because, of course, like, it's just a very important FOMC. So, okay, I'm going to mute myself in just a couple of seconds because this press conference, we need for it to go well. There's currently only like 26,000 people watching, but you know, it could be better. Okay, there we go. So let me mute myself and let's open this.
And squarely focus on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged. The housing sector remains weak.
Okay, it's paused. I just noticed. I'm going to fix it now. Just give me 2 seconds. So let's fix it. Just give me 2 seconds over here. It does this, unfortunately. Okay, so now it should be fixed. And let's bring this to the latest. Sorry about that.
1.1% next year, well below the median estimate of the longer run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for.
I just want to share my quick thoughts on that. So them saying that they will increase the rates further into the year is actually super bullish. So that means we're most likely not going to see an interest rate increase in the next couple of months, at least I'd say. So that is incredibly bullish for Bitcoin, number one. Number two, them reducing their securities holdings means that they'll have less risk in the economy. So that is also bullish. So those are the two things that I wanted to mention very quickly. So let's jump back into the stream. So let me get that started. And let's get that going. So just give me 2 seconds, guys, and let's get rid of that.
As projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Colby. Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they've felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
Okay, I want to comment on that very quickly. Now, as he said that we will most likely increase interest rates in the future, in the next upcoming months. He said something like that. Now he's saying that the committee's only decided to do what to do on this meeting specifically. So he's not giving a guarantee if they will increase, decrease, keep interest rates the same in the next meeting. So that is super interesting. Bitcoin is not doing much. If I show you the chart like this, it's still at 25.9K, but let's get back into the meeting. Just wanted to share my quick comments over there.
Help us understand the narrative in the dots. Stronger GDP, less of a hit to unemployment, slower progress on inflation. And I'm wondering, in this sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand's not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all 3 of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So, although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the 3-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of, this year and next year, will contain a good amount of disinflation from that source. And that's, again, probably going to come slower than we would expect. That leaves, the big sector, which is a little more than half, pardon me, of core PCE inflation. That's non-housing services. And, we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive. And I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Nick.
Nick Tamaros of the Wall Street Journal. Chair Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first, I would say that the question of speed is a separate question from the question from that of level. Okay, so and I think if you look at the SEP, that is our estimate, our individual. It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward, and we'll get to see. We don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you can from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Gina.
Thanks for taking our questions. Gina Smilek, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
You know, I mean, on the first part, I just think we're following the data and also the outlook. The economy the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really. It's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn is supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, you know, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually, in reality, wind up being lower or higher. And you know, there's really no way to know. But it's what people think as of today. And as the data come in, it can move around during the intermeeting period. It could wind up back in the same place. But it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously, the current rate, according to the committee, is not sufficiently restrictive. Is it 5, 6? Is it 6? Where's sufficiently restrictive? Thank you.
You know, I would say again that I think that over time, the balance of risks, as we've moved from from interest rates at effectively 0 now to 5 percentage points with an SEP calling for additional hikes, I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. And if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going. So I think, you know, what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year, and I think it's reasonable to think that some of that may come into effect. So we're, you know, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency, you know, with more data over time.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I wanted to ask further on the lag effects. When you're considering when you would hike again throughout the course of the year, are there things that you would expect to kick in as those lag effects come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off the 2-year, which is a pretty...
Guys, just hang in there. There is not much happening, right? There's still a couple of more minutes, in my opinion, for this to continue going on. It's safe to stay until the end. Until the end of the event. because of course there could be a very interesting question. He could give a very interesting answer that could cause Bitcoin to move more volatile. I mean, if we just have a quick look at the markets right in between, Bitcoin's not doing much. We're at 25.9K. We have this very huge wick towards the downside. There's a lot of exhaustion in sellers, but again, it's a news day, so this doesn't specifically mean anything. If we look at the S&P, we saw this dump. Now we're seeing a major pump towards the upside. Again, it's just a volatile day. He's saying that they could potentially increase interest rates later on in the year, but not immediately. So I believe that's why the S&P is pumping. But yeah, he's not saying something very interesting, but stick around until the end because he can. And let's smash up the like button, guys. Let's try and get this stream to 400 likes. That would be very much appreciated. But for the meantime, let's jump back to the press conference. I'm going to stay until the press conference actually ends. So if you do stick around too, it'll be more beneficial for you. So let's just jump back into here.
So there's not any certainty or agreement in the profession on how long it takes. So, then that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate, I can't point to that ultimate endpoint. I can't point to a specific data point. I think we'll see it when we see inflation, really flattening out reliably and then starting to soften. I think we'll know that it's working. And ideally, by taking a little more time, we won't go well past the level where we need to go.
I was curious if you could give us an update on what you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And if we were to see what we would view as significant tightening beyond what would normally be expected because of this channel, then we would factor that into account in making rate decisions. So that's how we think about it.
Let's go to Chris.
Thanks. Chris Rugaber at Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation is now housing prices. And then we've had some quirks in used car prices. So given that these trends are in place, I guess I'm sort of asking the flip side of Nick's question, why signal additional rate hikes? Aren't things headed in the direction you need? Why not simply give it even more time? Or it's surprising to see so much hawkishness in the dots given what we're seeing recently.
Yeah, so we're 2.5 years into this, or 2.25 years into this, and forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and typically forecasted that it would, and been wrong. So I think if you look at core PCE inflation overall, look at it over the last 6 months, you're just not seeing a lot of progress. It's running at a level over 4.5%, far above our target, and not really moving down. We want to see it moving down decisively. That's all. Of course, we are going to get inflation down to 2% over time. We want to do that with the minimum damage we can to the economy, of course, but we have to get inflation down to 2%, and we will. And we just don't see that yet. So hence you see today's policy decision, both to write down further rate hikes by the end of this year, but also to take.
So overall, right, the approach that they're giving is very neutral, right? They're not being aggressive. He's saying that they could have increased interest rates today, but if they did, right, let's get to 400 likes. By the way, we're 6 likes away from 400 likes. That would be absolutely crazy. If they did increase the interest rates today, what would happen is that, right, I showed you this earlier on in the stream. If I show you again right now, I said that if they did continue to increase the interest rates, then basically what happens is, right, the unrealized losses on bank balance sheets will be even bigger, right? And we're already at like 6 times larger than 2008 times. So this is already incredible. So if they did increase the interest rates again, then that would be incredibly hurtful for their economy, and it could have caused the DXY to fall even more. And this for sure is something that they do not want. So this is their more overall stance. They're neutral right now. They don't want to hurt the economy, but they still want to reach that 2% inflation rate goal, which they're saying that they will get to by increasing the interest rates further down the line in the year. Are they going to do it? Who knows, right? So he's being very political, of course, not trying to impact the markets that much at the moment. So that's what's happening, right? The S&P is pumping a little bit. If we have a look at Bitcoin, Bitcoin is not doing much. It's not that much of an interesting FOMC meeting, but let's just stick around until the end, till we reach a conclusion on this press conference. So let me jump back into the meeting, and then let's see the final minutes.
I'm not going to comment on any particular paper, but I would say that I think the overall picture is that at the beginning, in early 2021, inflation was really coming from very strong demand largely for goods. People were still at home. They had money in the bank and they wanted to spend, and they spent a lot on goods. And of course, at the same time, and because of that high demand to some extent, supply chains got all snarled up. So prices went way up, inflation went way up. So that was the origin, and it wasn't really particularly about the labor market or wages. But as you moved through 21 into 22 and now in 23, I think many analysts believe that it will be important, an important part of getting inflation down, especially in the non-housing services sector, to getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just at a quite gradual pace. So, and that's a little bit of the finding of the Bernanke paper with Blanchard of a few weeks ago, which is very consistent with what I would think.
Let's go to Michael McKee.
Michael McKee from Bloomberg Radio and Television. You said in the past that you don't like to surprise markets. It's kind of been the Fed's view. Markets should have an idea of what you're going to do before you go in. You also said a number of times that it would take a while to bring inflation down. You reiterated that again today, and that we would get to a point where inflation could be sticky. So I'm wondering, as we go into the next meetings, how Wall Street or others should look at your reaction function. What will you be reacting to, time or data? In other words, if nothing much changes, if we're looking at the same sort of labor market, the same sort of inflation levels in July or in September or November, will you move because you've said you feel you need to? Is it time that's going to require additional movement, or would it be a reversal in inflation?
So
Guys, you're all very funny. You're all super, super funny. Oh, it's frozen. No, that's not good. Oh, is it frozen? I'm not sure. I think it's not frozen. Yeah, I'm just watching the chart of Bitcoin to update you guys if anything really significant happens. But yeah, I didn't realize that the thing actually froze. So it's cool. Oh, it's frozen. Yeah. Okay. Thank you guys for letting me know. I mean, Bitcoin's not doing much. I'll probably end it off soon as well. Yeah, this is just so annoying that it freezes. I think it's frozen because of this OBS thing. It's a big issue. I need to fix that later on. So yeah, it's cool. No worries. Bitcoin is not doing much, right? I'll end it off soon too. It's getting pretty late. So I might end it off. I mean, I'm not sure how long this is going to continue for. Usually it doesn't really do this for long. So maybe let's finish it off. There's, I think, a couple of more minutes left. I don't see anything. I mean, he's really answered all the big questions that could cause volatility, right? It could cause major volatility on Bitcoin. Really, it's just not happened. I mean, we've seen a move down to 25.7. We've seen a move up to 26. But really, that's just a $300 move for Bitcoin, and that's not anything really that significant. So, I mean, the next couple of days are going to be important, right? The next couple of days are going to be important. We could play out this, bearish continuation scenario on the daily chart. We've been having a lot of doji candles, and it could lead to a reversal up to the 26.9K level. And, it's just, it's not... personally, for a trade, right, I'm not looking at anything other than this potential trade. If there is something, of course, I will make a video and it'll be all be fine. So it's just the FOMC is not saying anything too crazy. Like, I think they've just ended the meeting. In fact, let me have a look. This screen has not been even sharing. It's so annoying. It's so annoying. I don't understand. It's just really annoying that this thing is not sharing. So let's go to Brave browser. Okay, now it's sharing again. Okay, perfect. So let me have a look at let's finish this meeting off. I might as well end it in the next couple of minutes. I think you guys are leaving as well, so it's fine. Let me just end it off, and then yeah, let's have a look at the meeting.
Mr. Chairman, Edward Lawrence.
See ourselves as the judges of appropriate fiscal policy. I will say, and many of my predecessors have said, that we are on an unsustainable fiscal path, and that needs to be addressed over time. But I think trying to get into that with lawmakers would be kind of inappropriate, given our independence and our need to stick to our knitting.
Is there any conversation then about the Federal Reserve financing some of that debt that we're seeing coming down the pike?
No, under no circumstances.
Courtney.
Thanks for taking our questions, Chair Powell. So looking at the SEP, it looks like GDP for this year was raised significantly, your forecast for GDP this year. The unemployment rate, meanwhile, was pulled downward. And so should we take that as a sign that the committee is more confident about the prospects of a soft landing, at least as it relates to what you were expecting in March?
I would just say it this way. That I continue to think, and this really hasn't changed, that there is a path to getting inflation back down to 2% without having to see the kind of sharp downturn and large losses of employment that we've seen in so many past instances. It's possible. In a way, a strong labor market that gradually cools could aid that along. It could aid that along. But I guess I want to come back to the main thing, which is, though, simply this. We see, the committee, as you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%, and will do whatever it takes to get it down to 2% over time. That is our plan. And we understand that allowing inflation to get entrenched in the U.S. economy is the thing that we cannot allow to happen for the benefit of today's workers and families and businesses, but also for the future. Getting price stability back and restored will benefit generations of people as long as it's sustained, and it really is the bedrock of the economy, and you should understand that that is our top priority.
Just a quick follow-up on that. I'm just a little confused because you said the committee will do whatever it takes to get inflation down over time. But when I look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
Sure. So, if you look 2 and 3 years out with the forecast, first of all, I wouldn't put too much weight on forecasts even 1 year out because they're so highly uncertain. But what they're showing is that as inflation comes down in the forecast, if you don't lower interest rates, then real rates are actually going up, right? So just to maintain a real rate, the nominal rate at that point 2 years out, let's say, should come down just to maintain real rates. And actually, since we're probably going to we're having real rates that are going to have to be meaningfully positive and significantly so for us to get inflation down, that probably means that certainly means that it will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think, as anyone can see, not a single person on the committee wrote down a rate cut this year, nor do I think it is at all likely to be appropriate if you think about it. Inflation has not really moved down. It is not so far reacted much to our existing rate hikes, and so we're going to have to keep at it.
Julie. The mic is coming.
Oh, sorry. Thank you. Hi, Chaparral. Julie Chabanas, AFP News Agency. The May job report showed a rebound in May in black workers' unemployment. Is it consistent with the Fed's maximum employment mandate? Are you worried about that, about this rebound?
So we are, of course, worried about there are long-standing differences in racial and ethnic groups across our labor market. That's a factor that we can't really address with our tools, but we do consider that when we're thinking about what constitutes maximum employment. It is for us a broad and inclusive goal. And so we do watch that. But remember, all unemployment, including black unemployment, has been bouncing around right near historic lows, historic modern lows here. So we're still talking about, what is as strong a labor market as we've seen in, a half century here in the United States. So overall unemployment of 3.7% is 0.3 higher than it was measured to be at the last a month ago, but still it's extraordinarily low. And so it's a very, very tight labor market.
Megan.
Thank you. I want to follow up first a little bit just on the rent question on housing. We heard Governor Waller talk about how, I'll back up, we haven't quite seen the slowdown in rents show up in CPI yet, and we did hear Governor Waller talk about how an uptick in housing might mean that there's not going to be as much relief coming or a shorter bit of relief than we thought. Can you talk about how you're thinking about that and how that played into today's outcome?
I wouldn't say, so that's, as a factual matter, that's correct. We do need to see, rents bottom out here or at least stay quite low in terms of their increases, because we want the we want inflation to come down, and rental is a very large part of the CPI, about a third, and it's about half of that for the PCE. So it's important, and so it's something that we're watching very carefully. It's part of the overall picture. I wouldn't say it's the decisive part, but take a step back. What you see is look at core inflation over the past 6 months, year. You're just not seeing a lot of progress, not the kind of progress we want to see, and it's hard to avoid that. And the committee, people in the committee, the median went up significantly, so that the median participant now thinks that core PCE inflation on a 12-month basis will be 3.9% this year. So once again, every year for the past 3 years, it's gone up over the course of the year, and that's doing that again. So we see that, and we see that inflation forecasts are coming in low again, and we see that tells us that we need to do more. And so that's why you see the SEP with where it is.
Could you also talk briefly about your outlook for wages, and given the recent slowdown in core services excluding housing, how far you think wages might need to fall in order to to get inflation back in line?
So wages will continue to increase. So what we're talking about is having wage increases still at a very strong level, but at a level that's consistent with 2% inflation over time. And so I think we've seen some progress. All of the major measures of wages have moved down from extremely elevated, not extremely, but highly elevated levels a year or so ago, and they're moving back down, but quite gradually. And we would want to see that process continue gradually. Of course, it's great to see wage increases, particularly for people at the lower end of the income spectrum. But we want that as part of the process of getting inflation back down to 2%, which benefits everyone. I mean, inflation hurts those same people more than anyone else. People on a fixed income are hurt the worst and the fastest by high inflation.
Greg.
Thank you so much, Chair Powell. Greg Robb from MarketWatch. I just wondered if the committee has talked at all about the labor market, and there's strikes now in Hollywood, and now the United Auto Workers are talking about a possible strike. I mean, aren't workers, we have some, workers have power now and are going to be seeking higher wages. Does that come up in your discussions? Thanks.
So the topic of wages in the labor market and dynamics in the labor market is about as central a topic to our discussions as anything. I mean, it's very, labor economics, and the labor market are utterly central. It's half of our mandate. So we spend a lot of time talking about that. I think, there are structural issues that are really not for the Fed. And so we don't spend a lot of time, although we take notice of.
Guys, I think I'm going to end off the stream over there. It's getting pretty late for me. I'm super tired. Thank you so much for all tuning in. If anything happens, I will be updating you guys on my free Telegram channel. I mean, Bitcoin is not doing much. We're at $25,800. I don't think that really they've asked all the hard questions. So I don't think anything crazy will happen now in the markets. So everyone, thank you so much for watching. It's been an absolute pleasure doing this stream. Thank you for smashing up the like button. You guys are absolutely fantastic. I really do appreciate that. I appreciate your support as always. But everyone, again, thank you so much for watching. Take care. There's a bit of a lag actually in the stream, so I'm waiting for the stream over there for it to sync up with what I'm saying. But yeah, I mean, thank you for watching again. I'll be dropping some pretty cool videos in the upcoming days, some vlogs, some tips for success on teenagers. That's going to be a very cool vlog. So do make sure to smash up that notification bell too. And yeah, guys, that's pretty much it. So thank you again all for watching. Have a very good night. Have a beautiful day. You guys are the best. And I will see you all hopefully tomorrow or in the upcoming days. So guys, thank you. Take care as always, and I will see you all in the next video. Take care, guys, and bye-bye.